More selling is coming. I'm your host, Steve Van Metre, and thanks for joining me today. And get ready for more month-end selling as the machines hit extremes. Now, as you've come to notice, we talk about how these machines or CTAs are positioned, and a lot of people think, well, when they reach extreme position, that means the market's going to reverse. Well, not so quick. One thing I want you to understand as we go through today's show and future shows and talk about machine positioning, remember, the ones we're looking at now are very quick moving. And so there's a lot of other machine and other algorithms and other strategies that are much slower moving. And that's why you see when these machines hit, say, really long positions, the next thing you know, a second wave comes in of buying. Same thing, we're going to look today to see how they're very short. A lot of people say, hey, that means it's over. No, what that means is if the market doesn't rebound, there's a whole second wave of selling coming. All right, let's take a look at the positioning. Now, remember, we've got these blurred out. These are, again, proprietary reports. I can show you when they're made public, but when they're not, I've got to only talk about them generically. Now, what we can notice here, we're looking at the report from Metre, and we see their equity positioning is now at extreme on the short side. How about the bond positioning? Largely all on the short side. So there may be some further equity selling, maybe a little bit more bond selling, depending on which G10 nation or which equity indice is not quite all the way short. But look for that commodity positioning. What do we see here? Everything's heavily short. We're not seeing it quite that much in the oil space. So if you're in the WTI space, no, it's not, we're seeing positions that are really not that short at all. How about the currencies? Very long the dollar, very short everything else. So again, keep that in mind. We're now hitting these extremes. So the question then is, does that second wave of selling hit? Let's continue forward. Because where are we at with Goldman? Now, we have to go backwards a little bit to Goldman before we look at this week's. Now, keep in mind, last week they said over the next month that there could be, if there's a big down move. Now, notice, what did we see the last 3 days in the market? Big down moves. So that puts in position $48 billion for sale, a little over $1 billion a day, which is not terribly large, but still putting downward pressure on that market. How about the pension rebalance? Now, this is just Goldman's number. There's other firms, large banks that manage pensions. So Goldman's saying they still hold estimates of $18 billion in sale by month end. And that matters because we're here. What are we coming into? Month end, we've got a whole week of trading left. These pensions at their quarterly rebalance, they make their decisions ahead of time and then they go forth with them. One thing you have to think about these pension funds is they're either in stocks or in bonds for the most part. So they're selling stocks. Guess what they're buying? They're buying bonds and vice versa. Let's keep going. Because here we see from this week's Goldman report that they note that the month-end pension rebalance still has $7 billion for sale. CTA shorting a little more on the S&P, down $1 billion a day. They're projected for next week, but doesn't get much bigger even if the market breaks lower. So we still hold what we saw last week. Is not conducive to buyers stepping in today. Reminder, they say attendance will be light and liquidity will be tough to come by on Monday and Tuesday. Think of more downside with Rosh Hashanah. Now, we are officially primed for a nasty move higher at some point next week that would promptly be reshorted. Overall market trend into year end still points to lower. So again, keep all this in mind as we kind of dig deeper here. Now let's head over to TD Securities, where we see their positioning is fairly short, not looking to go even bigger, but still fairly short on that. Now let's take a look at Momentum Timer Pro, a formula-based strategy. I look to beat these machines to give us the edge. What do we see on the S&P 500? Momentum is negative. The relative strength indicator, you note, is now at 29, oversold. Those of you that trade the RSI know that you get under 30, it's oversold. Traders will look to come in and push that up and buy. How about we see a negative cross on the MACD? So that is bearish. But notably, what do we see on Friday? People came in late trading and bought. Why? Probably because the RSI Momentum Time Pro's got 8 consecutive days of sell signals because there was one buy signal mixed in there. There's holding no position because, well, it's got sell positions across the board. Next upside target somewhere around 372 to 373. Downside target, I'm going to remain modest here and just say, hey, it's a retest of the June lows because, that's just what we have to look at for the moment. If that breaks, then chaos ensues. Now, if you're wondering how do you get Momentum Timer Pro, well, there's 5 more days. It's free. I'll put a link up here in the description and in the description below. The link, of course, in the corner. Check that out. You also get Jeff Snyder's research, Chasey Shoe Charts research, and a special discount when we go paid. So keep in mind. Now, let's take a look at the charts, see what we can see for the S&P. So notably now we got it on the 2-year chart. We got the volume profile turned on. We look back over the last 2 years and what do we see? Heavy buying up here. This is where retail buys the most at the top of the market. So it tells us we're still in the early phases of a bear market. We'll look at some more convincing evidence. We know now we're looking at these June lows down here. There's not a lot of support in terms of volume traded below that, but with the RSI hitting oversold conditions and the MACD getting down near fairly oversold conditions, we would expect, as Goldman mentions, perhaps a rebound and then a reshort. Now, if we go back to the bigger picture, which we've looked at previously on the show, and we talked about how the RSI on the weekly gets up near the 50 or the low 50s in early stages of bear market and breaks down, well, it tells you we're more likely in a bear market, consistent what we see in the early phases of the great financial crisis and, of course, going back to the dot-com bubble. So again, you'll see a lot of moves of people coming in and buying and selling, and then of course when the liquidity dries up and the floor falls out, well, there goes the market. All right, let's talk about the Nasdaq now. Let's head back over to the charts here. And what do we see on the Nasdaq? The QQQ also oversold. RSI is at 30. MACD negative cross. Momentum Timer Pro 23 consecutive sell signals on the daily. That would match the S&P if it wasn't for that one off day that it had a buy signal. It's also holding no position. Next upside target is 280 to 281. Downside target remains a retest of the June lows. Again, this isn't something, unless you are a trader, that you would be eager to jump in on. Unless you're a very short-term trader, you're kind of just holding out here on the S&P. Again, you're looking for it to get back up into the sell zone, maybe close this gap here, and then the bottom comes out if there's no buyers. And likely with the corporate share buyback blackout still in phase, it's going to be tough for retail to drive the tape higher. Now let's take a look at the Nasdaq. What do we see here? Again, beautiful topping pattern over the last 2 years. You look at the volume profile, that red bar, what do you see? Most of the buyers above. You see that, again, retail buying the most of the top. Some of them starting to sell, not fully convicted yet. But notably, if this breaks these June lows, well, again, look at this very thin amount of volume that takes the market way down. This is something a lot of people aren't pricing in, that there isn't a lot of support here of people that previously wanted to buy. So again, we zoom in here. What do we see? The downside target retest of the June lows. I suspect there'll still be some buying interest there. And on the upside, we'll just say very conservatively, just up here in this 282 to 283. Not a lot of strength. Could get higher, sure, but in the short term, I wouldn't hold my breath on where this market goes if you're looking for it to go higher. All right, let's move on to the bond market. What do we see here? Looking at TD securities, they're fairly short. Now, one thing is notable, I want to talk about the bond market is, we saw these machines hit these extremes. And again, then what happens? All these other slower machines started selling. And we're kind of getting what it looks like to the end of that because these machines are heavily short. What happens the way these CTAs work is they bring their target down to short cover kind of every day. So unless prices of bonds continue to fall, if they start to hold their position, we'll get closer and closer to them short covering, and then all of a sudden they'll trigger a big massive move as all of them start to cover their shorts. Here we can note that also we're hitting heavy zone of resistance where previously we see on the 10-year Treasury a lot of buying has come in, and we've seen waterfall moves down in yields. So keep that in mind, that could start to come in and play as well. Let's take a look at TLT. The long bond here, momentum still remains negative. The RSI, it didn't get down to oversold, just was hovering kind of in these low to mid 30s, but didn't get down, of course, to 30 here in this last week. MACD still holding a negative cross. Momentum Timer Pro is one consecutive day of sell signal because it popped a buy signal on Thursday there. Upside target, no change, 111. Downside target, still 105, as looks like we're seeing support start to hold. Let's take a look at the chart. And here we see TLT, same broad picture, heavy selling above. And we've seen this in past and before near bottoms where it'd be a big wave of selling, a move higher, a second wave down, and then it kind of bottoms out. Let's zoom in a little bit. And if this kind of holds in here, then it should be what we're looking for a move higher. Of course, we'll watch Momentum Timer Pro to pick that up. But it's really got a lot of work cut out. I mean, something like this, you really would wait till it gets probably above 114. But we'll see the momentum start to shift. We'll watch those CTA models at some point, likely up here in the 109 to 111 range. We would actually start to see some short covering there. So again, this one's too early to call too, but nevertheless something to keep an eye on, particularly if you're looking for opportunity in a bear market. Let's go next to the metals. What do we see here? Heavy short positions in the metals. This from TD Securities. What do we know? We also know Nomura's, their machines are pretty heavily short on the metals too. And what does this tell us? Does that mean there's a big short covering? Well, not yet. If we look at their signals, dig a little deeper in there, we see they're a ways away. So these machines are likely to hold these positions before there's any short covering. Put a big risk in the metals because a lot of those are starting to break big support levels, and that means these machines aren't going to bail anybody out. Let's head over and look at the charts. We'll start with gold now. And then we'll look at gold futures because, really, you look at the big picture of this chart and you see that it's sitting right on a massive topping pattern. Now, let's go back and look and see what Momentum Timer Pro is telling us, and then we'll look a little bit deeper at gold futures, which is what I really prefer to follow. How about the GLD? Momentum's negative, but it is oversold. So again, people are going to trade the RSI. They're going to come in here. So look for maybe a short-term bounce. And MACD is still negative. Momentum Timer Pro saying 24 consecutive days of sell signals. Upside target 155 to 156. I brought this down a little bit. Downside target just down slightly because this thing is looking very close to going off the edge of the cliff. Now let's take a look at gold futures. I've got my lines drawn on here, and you can see 1687 has been the line that this thing needed to break. You see this is a topping pattern. Now if everyone says, no, this is a continuation pattern, again, let me remind you, look at silver. Everybody said this was a continuation pattern. Silver goes higher. It came down, reconfirmed its zone. This was a buy zone. You see all buyer, buyer, buyer between these two purple lines, turned into sellers, and it plunged down, and now silver is heading lower. That tells us that gold is doing something very similar. So could there be a push back up here into the 1700s? Yes. Will this get the CTAs to short cover? No. But then look at all this lack of volume here all the way down to 1300. Some people say, how do you think gold is going down to 1300? Look at the fact there's nobody really buying it except around 1500. And then after that, the floor falls out. All right, let's take a look now at still the trade of the week. It remains the dollar because why not? It keeps going higher. We notice machines, they are very heavily positioned to the short side on the dollar, or not on the dollar, on anything paired to the dollar. So looking across, Nomura, looking at TD Securities, very short other currencies relative to the dollar. That is helping push momentum on the dollar higher. And that's what I want you to see here is the machines moved along dollar positions, short other currencies, and then everybody started following suit. And that is kind of the idea of why they created these machines, is to make the trend and then beat it. All right, let's look first. I didn't want to go there at UUP here. Let's see what we've got. RSI is completely overbought. I forgot to make a note of that. Momentum is positive. MACD is back up. And we see Momentum Timer Pro came in with a buy it open at 28.54 with an initial stop at 28.31. The Friday closing at 30.32. This is a positive. We moved our upside target from 112 to 116 on the DXY. I've raised our downside target to 29.44 on the downside. And how, if you're trading the dollar, what do you do when you're up? Raise your stop losses up. That's what you do. If you're in the positive, either put that trailing stop on, raise that stop point up, whatever you need to do, whatever you're comfortable with, that's how you should be trading this. And now let's take a look at the charts and see what's going on here with the dollar. Where is it headed? To 116, maybe. When we look at the chart of UUP, why did I dial that support down to 29.44? It's right here. Notice this little spike of volume here. There's been sellers here, but there's also been buyers. Those sellers got flushed out and the dollar went higher. Now let's look at the DXY, because we need a chart that actually goes far enough to see. Here we are, broke through the target at 112, at 113, 116 is the next. You get to 120 and this thing is going to go parabolic for sure. So that's what we're looking at. The dollar still, again, the trade of the week, because, well, hey, if you can't beat it, you got to join it. And with that, I'm Steve Van Meter. Thanks for watching. Thanks for being fans. Bye now.